Hello, Mark Sturdy here with a brief extract from our work this week for free subscribers. And if you look at the summary of our positions, our strong conviction stances, we remain bears of the dollar. We are bullish in all the stocks, and what I want to examine is the detail of the S&P 500, which, if we go and look at the long chart, you'll see that it remains at the top of a very long-term bull trend from 2009 or so. That's the quarterly futures continuation chart. Look more closely and you'll see that there has been a rally from April this year, no question about it, breaking through the prior highs 63.35. Those prior highs, once broken through, were retested several times. The market finally found to be strong and the market bounced. Now note this retesting here, that was a weekly key reversal, higher high, lower low, ending on the lows, and that was reversed. Note too that we've had a weekly key reversal here. For some, that might have been in the last week or so an anxiety sound, a signal, pushing up, as I say, a higher high, a lower low, and ending on the lows of the previous bar. But if we look more closely at the price action here, you'll see that in fact, far from providing unambiguous anxiety, it's more complex. The pullback was indeed dramatic, from 6,800 down to 6,500, some 300 points. The prior high supports, though, held, no question about it, traded briefly beneath and closed above. The subsequent price action sideways, and then another retest a day or so ago of that same support and bounce seems to me to be unambiguously bullish in itself, and given the predilection of the market to do these weekly key reversals, outweighs the bearishness of that key reversal and is unambiguously bullish on the whole. Added to which, of course, if we look further around, the Euro Stoxx breaking up through prior highs, the Nikkei dramatically breaking up through prior highs in the 1980s, rather more anemic situation in the FTSE. All I'm saying is that the anxiety that some might have felt in that weekly key reversal is more than made up, more than countered, it seems to me, by this double bounce off the prior highs in line with the bullishness elsewhere in all these stock markets. It's a buy. Thanks very much.